Welcome to Ty's Daily Market Update. I'm Ty Wong reporting from New York, and it is Thursday, July 23rd. Okay, let's look at the markets right now. Midday, the Dow is the S&P 500 down over 1%. Meanwhile, SK Hynix, the ADR is up 5% after Korea was up overnight. What do we have? Yields every day, yields back up 3, 4, 5 basis points. And this is concern about higher oil, about inflation. This trade will work every day until it doesn't. The dollar is also higher. Precious metals is lower today across the board. It's breaking a 4-day win streak. We're gonna have to look at a couple more days of price action to see if this little win streak we just had was the beginning of something, or we are retracing once again. And crypto is lower. It hasn't been able to withstand the big drawdown in stocks. So what's driving the market lower? It's actually consumer cyclical and communication services. In fact, Google down 6% as of the screenshot. Facebook is down 4%. Tesla down 13%. Amazon down 4%. Now, we're breaking down just below the 50-day moving average here. I think we're going to have a few sessions of weakness on oil and capital expenditure concerns that we'll get to in just a second. And then we get some more earnings reports, and we'll have to see how that goes. And also at some point, but not for another at least week and a half, is the employment report. Okay, Axios reporting Trump is close to a decision on a massive attack on Iran. He told Axios that he's seriously considering restarting major combat operations, including strikes that would be bigger than the ones carried out during Operation Epic Fury. Now, Trump acknowledged that a decision would have consequences and stressed he hasn't made a determination yet. I'm considering a massive attack bigger than ever before. I'm closer to making a decision. Now, remember, the president is all about hyperbole. Everything is the most beautiful, bigger than ever before. Is this rhetoric, or is this hyperbole? Could be a bit of both. He certainly seems very upset at Iran over the past couple of weeks. He said the Iranians want to negotiate but are not ready to make a deal at the moment. They haven't received enough pain yet. As a result, I think we're going to get an oil panic into the weekend. It'll be interesting to see if we get a sell-off tomorrow, the last day of the last trading session of the week. If we do, it suggests that a lot of this oil rally, has been speculative, rather than perhaps a little more fundamental. The problem is, if you buy oil into the weekend, if something happens, they call a ceasefire, something's announced in Islamabad, right? It's going to gap lower on Monday. It could be $10 lower, and you're never going to get a chance to get out. So tomorrow's price action on oil is going to be interesting. Brent, I was wrong. I said, we could get to 100, end of the week. Well, it's at 100 right now. It is overbought. It can become more overbought, but the easy money has already been made. Once again, if you buy here, we could certainly get into this area, or we could have a significant correction. Consider this. Now, if you were long into the weekend, I would say at the margin, you're probably okay, but there is definitely a risk involved. And I'll tell you what, the options, if you instead, are going to be expensive over the weekend. Gasoline and heating oil continuing to move higher. Gasoline 1.7%, diesel 4%. Diesel probably more important one for the economy in terms of inflation. Okay, we're climbing. Yesterday was $4.06 on average. Today is $4.09, and it's up 30 cents in 2 weeks from the low here on the 7th of July, just before we renewed hostilities against Iran for shooting at ships in Hormuz. Okay, Wall Street Journal, and this is the Google's earnings report after the close yesterday. And the problem with Google is they're spending a lot of money on capital expenditure. Apparently, they're projecting to spend over $200 billion in Capex this year. So after they announced this during earnings, they had strong results, 24% year-on-year revenue growth, $120 billion revenue for the quarter, 82% growth in its cloud division, which booked $25 billion. That's a really, really big numbers. It also had $98 billion in other income driven by its gains in other companies' stock that it owns. Zacks investment manager analyst says the $200 billion was a do not cross line. And he also expressed frustration about what he said was Google's lack of explanation on how its AI spending plans would translate into more revenue for the company. Basically, if you're going to spend $200 billion, can we, talk about it a little bit? And, for this analyst, Sundar didn't really talk about it at all or enough. Analyst at Truist Securities said he expected that Google was going to maintain its previous guidance of 180 to 190 billion, but the company raised it from 195 to 205 billion. The problem with that is we work off 205 billion, puts 2027 in the scary territory. He thought it would be, the top end would be maybe next year for Google's AI spend, capital expenditure spend, 250 to 255 billion dollars, but now he thinks it could be 270 or 280 or maybe even higher, and that's just scaring the market. Now, the company is doing very well. The cloud business, the cloud backlog grew to 514 billion from 460 billion. That's how much demand it has in the future. Orders have been placed for the future. Now, these aren't 100% guaranteed, but it tells you how much demand there really is. And he goes, that alone speaks to the pent-up demand for compute. Operationally, they're executing honestly flawlessly on the opportunity around search monetization, integration of AI and cloud growth. So the market is basically worrying, oh my God, $200 billion and ignoring everything else. And part of it, too, is probably the Kimi moment from early this week saying, oh, my goodness, well, we need all this capital expenditure if the Chinese can do it cheaper. But I don't think the Chinese can do it cheaper, without serious chips. Okay, here's Google, down 7%. I'm not a seller here. This is their big rally on Gemini. They've had some bad news in terms of the latest Gemini Pro, but they have a big business that throws off a lot of money. So, if anything, I would start thinking about, buying here and then maybe averaging down. But, if you're long, I wouldn't be a seller here and I wouldn't sell short here. I think this is a little bit of an overreaction. The earnings was, very good. It's just Capex was high. Wall Street Journal also reports a social media harm trial has been halted after a teenager drops a lawsuit against Facebook. He dropped, this trial was going to start in LA next week, and he just dropped the case. The same kid had settled personal injury lawsuits again with TikTok, Snap, and Alphabet's YouTube. We don't know how much he settled for. Now, Meta was the only remaining defendant. They were going to take it to trial. Meta said this team dropped the case without receiving any payment. And apparently, maybe it looks like his case was weak. He had only used Facebook and Instagram for less than 10 minutes a day on average and created the accounts only 6 months before filing the lawsuit. His lawyer said, he just wanted to hold social media companies accountable and push for changes, and he did that. So now, there are probably many court cases that the internet, the hyperscalers will have to fight. A separate jury in New Mexico ruled against Meta, earlier this year for a fine of $375 million. And a state court judge says he's weighing further damages against the company. What kind of damage could you possibly have done to give somebody $375 million, right? And this is the problem with the American law system and American personal injury lawyers. We should have tort reform. You do some serious damage, mentally, maybe it's $5 million. You want to punish them, $10 million. $375 million is crazy because the jury system is honestly broken. I've been on juries. I've been on jury selection, on jury selection boards, and we don't really have a better way to do it, but to have no upper limits on damages causes all sorts of problems where the lawyers just want to settle and other lawyers just want to sue. And the lawyers who want to sue will never let any reform go into the system. Now, Facebook dropped, it was good news for Facebook, but it's down 4% due to drop in Google. This is very choppy, as we've said before. The weekly chart shows that it's just a big sideways trade. If you want to try to range trade this between 500 and 700, you can. I don't get too heavily involved in this name. I have some, but I've held it for a long time. So SK, This is important because, as the ADRs came out and it's been pretty popular, the arbitrage opportunity between SK shares in Korea and the ADRs here, there will not be that much arbitrage opportunity. Basically, SK has said, the amount of South Korea listed shares being converted into ADRs is at 2.5%. That's the limit. We're already at the limit after the offering. So unless people sell the ADRs for Korean shares, in which you would take a loss, you can't actually create any more ADRs, and that way, and so that you can't really, without being able to create on both sides and trade it on both sides, you really can't do the arbitrage. So that means that the U.S. listed SK shares can trade at a persistent premium to Korean shares, and people who shorted the ADRs in the U.S. may want to unwind and cover those, which is why SK is probably higher, 5% higher today, and everything else, the whole market is lower. I think it's smart to keep the premium. Taiwan Semiconductor's ADRs have averaged 12% premium over the past 5 years. Let's just keep it that way. Now, SK says they might issue more if there's a lot of market demand for it. I think this is the smart play. Very quick look at gold. Giving back some, this is a blow up of this picture here, of the chart here. We had 4 straight days, almost 3 white soldiers, which is quite bullish, not quite. Now, this down day, I wouldn't, judge too much from it just today. I want to see tomorrow if it's a second lower candle. But the key here is really this red line, this low here under 39.50. As long as we hold that, I think we're fine. I think there seems to be still some interest in gold, but let's see how we finish off in the week. Okay, earnings. Google came out, as you can see. This is stock gain, so I would ignore this 217 surprise. They did well. Tesla missed on earnings, being punished hard for it, down 13%. ServiceNow, was actually a decent revenue, a decent quarter. They're down a bit, 1.5%, which is okay. CSX, which does transport, up 5% after they beat earnings. So we get Intel after the close, but Raytheon has done quite well. That they produce Patriot missiles, and then Blackstone and Freeport are both lower after they beat, but I think that's an impact of the overall market today. Okay, lastly, just quick, we had initial jobless claims. We have this every week. This 187K number, new jobless claims last week, is a 60-year low. We haven't seen this since the late 1960s. Now, no real indications of why. I think it might be just a 1-week thing. I looked at the data and it says New York State claims fell by 17,000 this week, though it wasn't flagged by the Bureau of Labor Statistics. So let's see what we have. What we have next week. Well, thanks for joining me today. I'll see you again tomorrow to wrap the week.